Good morning, ladies and gentlemen. I'm very honored to be here. Today, I would like to take this opportunity to share with you some latest regulatory changes in the legal environment, which I believe may have either long-term or short-term impact on the real estate market in China. First, we look at the land supply. Because of the huge population, China adopted the most stringent land policy in the world. So starting from 2004, the State Council and the Ministry of Land issued a series of regulations to intervene the real estate market from the perspective of land supply. The objectives of this land policy is to protect agricultural land, to control overheating microeconomy, and to improve effective use of the land. Among these a series of new regulations, there is a circular called Circular 34 is worth mentioning. It was released by the Ministry of Land in March of last year. This new regulation set out a couple of measures to be taken by the government, which is very significant to the market. The main points of this regulation include, you can look at the screen, increased land supply for low-income housing. So land supply for low-income housing shall be no less than 70% of the total land supply for residential purpose. The second is crack down land stalking and land speculation. The third point is the local government is required to formulate detailed planning conditions for each plot of land before tendering of the land. The fourth point is shorten the payment term of a land grant contract and increase deposit for land bidding. The last point of this regulation is reform of the land bidding system. This is a very important move. Change the method that whoever offers the most get the land, and implement a comprehensive valuation method with the price taking only 30% of all the factors. Another policy change in connection with land supply is to strengthen control of land supply in second and third tier cities by the central government. Before 2011, the central government only has the power to approve any increase of construction land in 84 major cities, and the local government has the same right for all the other cities. But starting from August of this year, the power to approve increasing construction land in another 22 cities was taken by the State Council from the hands of local government. These 22 cities mainly are second or third tier cities and located in the wealthy area of South China and East China. They include, for example, Qinhuangdao, Nantong, Yangzhou, Taizhou, Wenzhou, Zhuhai, Foshan, Dongshan, Dongguan, Guilin, Sanya, etc. This policy is widely regarded as having significant impact on the real estate market in these 22 second and third tier cities. Under the control of the central government, we expect that the land supply in these cities will become very cautious and slow in the future. Next, we look at the financing policies. In February of this year, China Banking Regulatory Committee released a new regulation alerting financial risks arising from real estate market. Firstly, this new CBRC regulation imposed limitations on the financing of real estate development. For example, a developer which delayed in development for over 1 year period will be put in a blacklist and no new bank loan will be extended to such developer. Another point is a developer is not permitted to borrow any bank loan to pay land premium under the land grant contract. The third point is a developer may only use land plus under construction project to use this combination as a collateral to secure its payment of development loan. And the land alone shall not be accepted as a collateral. The second point of the CBRC regulation is to increase down payment and interest rate for housing loan. So you may be aware that for the first housing loan, the down payment has been increased from 20% to 30%. And for the second housing loan, the down payment is 50% now. In October of this year, banks in many first and second tier cities increased the interest rate for housing loan. So the interest rate for the first housing loan has been increased to 1.05% of the benchmark interest rate. Previously, this interest rate is 10% discount to 30% discount of the benchmark interest rate. The third point of the CBRC regulation is to monitor risks in connection with real estate investment trust plan. Real estate investment trust plan is a very special product in China. It differs from REITs. It is a fixed return loan investment, and there is a no public market to be traded, and there are only qualified investors may invest in this trust plan. So starting from the beginning of this year, CBRC changed its policy regarding real estate trust plan. There were only disclosure requirements in the past for this type of product, but now it is subject to case-by-case approval of CBRC. So the percentage of real estate trust plan in the entire trust product has dropped from 48% in summer to 38% in September of this year. The third policy change I would like to talk about is to expand the purchase limit to more cities. In 2010, the State Council requested the local government to take temporary measures to impose limitation on the purchase of residential housing. Since then, about 30 first and second tier cities has released the policy that a household can only buy one residential housing after May 2010. So this is the history for last year. Situation changed in this year. In August of this year, the Ministry of Housing released a notice encouraging, actually it's a request, not encouraging, that cities meet certain criteria to take further actions to impose limitation on residential housing. These criteria include that cities have experienced significant increase in the purchase price and the transaction volume of newly constructed residential properties. The second criteria is cities in close proximity to major cities that have already implemented restrictive regulations. So we expect that 20 to 30 cities, second or third tier cities, will limit purchase of residential properties in the near future. So you may read the newspaper, and there is a news from Foshan government. Foshan is a city in Guangdong province. Foshan government once suspended its purchase limit policy, and such suspension was canceled overnight. So this fact indicates that the local government actually does not have much say in deciding when to implement purchase limit and when to cancel purchase limit. It all depends on the will of the central government. The next regulatory change is to encourage low-income housing. In 2010, local governments are under great pressure from central government to build 10 million units of low-income housing. And the total investment in low-income housing in this year will reach $200 million. In September, the State Council issued a new notice to give further guidance and incentives for low-income housing. These guidance and incentives include, the first point is increased land supply for low-income housing. We already mentioned a 70% threshold, 70%, that's the minimum. And the second, increase investment by central and local government, including all the revenue from public housing fund, and 10% of land premium will be invested in low-income housing by the local government. The third point is increasing credit support for low-income housing by banks. The last point is reducing tax in connection with building, selling, and operating of low-income housing. So because the legal and financial environment is more relaxing for low-income housing, some local developers and banks did switch part of their resources to the development of low-income housing. The last regulatory change I would like to talk about is foreign investment in real estate. This is a very hot topic since 2006. Since 2006, there are not too much changes in the policy of foreign investment in real estate. So generally speaking, foreign investors is required to set up an entity to engage in real estate development or transaction in China. And for foreign investors, whether this entity can be successfully set up, whether the equity capital of this entity can be transmitted into China and successfully converted into RMB is the most crucial regulatory matter. Mm-hmm. So in June of last year, MOFCOM delegates its power to approve any foreign investment below $300 million falling into encouraged category and permitted category to the local government, as well as the foreign investment below $50 million falling into the restricted categories. So in terms of real estate investment, residential properties, except for villa, are regarded as either permitted or encouraged categories. Villa, luxury hotel, and office building are regarded as restrictive categories. For any foreign investment project which have been approved by the local government, such approval is required to be filed with the MOFCOM. So in the course of filing, it is likely that the MOFCOM may challenge when it finds out that the major investor is a private equity fund. So MOFCOM is very sensitive when the investor is a PE. And in that case, MOFCOM will consult with the Ministry of Housing about the market in that particular city. So it will delay the filing process. So for investors, it is very critical to convince MOFCOM and the Ministry of Housing that the investment you are going to make is a long-term investment. Of course, it is a very tricky issue. What is a long-term investment? So that is my introduction about the regulatory changes.